Hi. Let's learn about lead banks. A lead bank is a bank that oversees the arrangement of loan syndication, receiving an additional fee for recruiting syndicate members and negotiating financing terms in the Eurobond market. Lead banks are also known as lead underwriters. A lead bank usually refers to an investment bank that manages the process of underwriting securities with other banks, known as syndicate banks. The lead bank assesses a company's financials and market conditions to establish the initial value and quantity of shares to be sold. The majority of shares are held by the lead bank, and it will work with other investment banks to establish an underwriter syndicate. This is an important part of coordinating large corporate debt offerings and IPOs. In loan syndication, multiple banks collaborate to provide a borrower with the necessary capital. The lead bank is responsible for aspects of the deal, including the initial transaction, compliance reports, repayments, loan monitoring, and overall reporting. Due to these coordination efforts, lead banks may charge high fees, sometimes as much as 10% of the loan principal. In an IPO or other forms of issuing securities, the lead bank organizes a group of underwriters, known as the underwriting syndicate, to spread out risk and/or merge funds in a large deal. Newly issued shares may carry a hefty sales commission for an underwriting syndicate, but the largest portion of shares goes to the lead bank, which also assesses the company's financials and market conditions to arrive at an initial value and quantity of shares to be sold. Here are 3 key takeaways. 1. A lead bank coordinates and oversees a syndicate for underwriting loans, bonds, or shares to be sold to investors. 2. The lead bank typically receives a more generous amount of fees than syndicate banks due to its coordinating role and responsibilities. 3. Lead banks are key for coordinating and marketing IPOs as well as large corporate debt offerings. Hope this would help. Thanks for watching.